All right, good evening, everyone. This is Joe Hinches with Beyond the Chart, and this is a technical analysis of the stock market today. Today is Tuesday, February 4th, 2014, and we want to go ahead and get into the indices and a couple indicators, and then we'll take a look at the another trade recommendation or trade idea. Not recommendation, this is an idea. So we'll start off here with the Dow Industrials. We had a big day yesterday down. We're closed below the 200-day moving average. We've broken a trend line. We've broken a couple of trend lines. So pretty good sized moves. We haven't been below the 200-day since back, a year ago, 13 to 14 months ago. So I think that really legitimate support on the Dow is going to come in somewhere around 14,800. And you notice for whatever reason the S&P 500 is a lot further above the 200-day. And again, I think the support on these could come in right down in this area. If you look at, in here, that's all the way down around 1650, something like that. I mean, or in this range kind of thing. So anyway, we're getting a little bit of divergence going on here. It would be not unusual to see a bounce back up to, say where this was a floor, now it's resistance. The support now becomes resistance theoretically, and maybe to this trend line, come back up and hug this trend line, then roll back over. That's a realistic possibility. Transportation average. I noticed one thing in here. It looks like a possible head and shoulders, so the declining neckline is a little bit weaker than normal. You got a shoulder, head, shoulder. It would project down here to the 200-day moving average, and that would start to get the transports catching up with the Dow and those other indices. The New York Composite is what I was looking for. Pretty solid break of this horizontal support again. This could become resistance as the 10 comes down. We roll back up, or even a little bit higher back up to the trend line that was broken, and then come back down for another leg down. I mean, I think that's a realistic possibility. We'll just have to see how it plays out. The NASDAQ, again, the NASDAQ's well above its 200-day moving average, and so it could easily play catch up, and all it takes is a couple big stocks in the NASDAQ to start to break. We'll just have to see. It sure didn't take too long to start to catch up here in the early part back in January. Okay, the other one I wanted to look at is the XLF, the financial indice or ETF, XLF. Okay, it's right down here around the 200 again. It's broken this trend line. And it's broken this trend line here. This trend line is pretty interesting. This trend line is all the way from October 2011. Okay, so it's broken that trend line. And the next one down, the next major trend line, in my opinion, is the one from the 2009 low, March 2009. You break that, I think the party's definitely over. It's going to be interesting to see if you look back here at 2003 to 2007, and when it broke it in July, August of 2007, it pretty much went into the downtrend of lower lows, lower highs, lower lows, lower highs, and basically signaled that we were rolling over, and that was the name of that ball game. Okay. Or name of that tune anyway. Let's put it that way. All right, that's the XLF. So here we are sitting down, potential support right in here. So we'll see if we get a bounce up to that trend line and then roll back over. It might not even bounce that high. I mean, we'll just have to see. Take a look at the short-term trading index real quick. Got an extreme reading yesterday, but really I think for a major bottom, you're going to need to see, like we're saying here, 2-day clusters or 3 out of 4. We are getting this 10-day average, exponential moving average up above the 1.5, kind of in the buy area. But it's not, I mean, you need to see, to me, this is just more of a heads up. we could be in a potential buy area and just start watching the price action real close. That's really what that's telling you. And the same thing here on the VIX. The VIX is getting up in this where it's got previous highs before. We start to get a close above 22.5, 23. We get a pullback and then rally again. And we're just going to have to, this is just an indication of what's really going on in the market more than anything else. And it's kind of confirming in my mind. Now, we are getting some divergence here on these two indicators that would say, well, maybe the move is kind of over there. We'll have to see. The high-low index, again, we haven't really gotten to where we're seeing a lot of new lows exceeding the new high number. To the extremes that we got back in August, in June, even in 14 months ago, where we had minus 269. So 269 more new lows than new highs on the day. We just haven't gotten that kind of extreme selling yet, and I think we're going to need to get that. You see what happened back in 2011 with that extreme selling that happened that got into the bottom. And even when I go back to 2007. I thought this was interesting. Okay, so here's where the market peaked in October of 2007. Well, look at the damage that was done in the sell-off prior to that peak, where it went up, it sold off, pretty heavy-duty damage, indicating that something was really coming. Then we got this narrow rally to new highs, and then that was it, and the market was rolling over. So it'll be interesting. I'm kind of looking for that kind of damage to start to occur to confirm that we got something more than just a pullback. So we'll have to see if we start to get that. Okay, I think that is it on those. And then, so I had a new trade idea for tonight that after looking at the stocks I'm following, and it's on Yelp. So we'll take a look. Let me make sure I've covered everything else. I think I did. Okay, on Yelp, we've got DI minus above DI plus. Okay, so that's a little bit of a negative environment here. It is a little bit oversold down in here. That doesn't mean that this can't just break and roll over to the right. So here's what I'm seeing. The 10-day, let me blow it up a little bit more for you. First of all, 5 waves. I think we've got 5 waves up on this stock in terms of the trading. And so that tells me that I think the major move has pretty much run its course. And so now the blue line is below the gray line, the blue-gray line. The 10 is below the 20. And I would like to see a close below today's action, and the low today is 75.19. So we get a close below today's low, I would be looking to buy puts or go short kind of thing. And this, I think, is a flag. It's almost like a little flag formation that you've got in here. I would like to see a bigger flagpole, kind of more of a straight line action, but still this kind of a consolidation type pattern. If we can get the break down below and close below this low, break down, and then I'd be looking for it to break this trend line to confirm a move down, and ideally maybe down at least to the 200-day moving average. We'll see. That's a pretty good little hike, but this thing's covered a lot of ground, so it's a pretty volatile stock. Anyway, that's the trade idea for today. That's it for tonight. This has been Joe for Beyond the Chart. Thanks for stopping by. Sign up for email updates. Click the little form over there to the right on the home page, and we'll talk to you tomorrow night. I guess we'll be focusing on the China stocks. I'm not sure what the theme will be yet, but that's what we typically do on Wednesday. So have a great Wednesday. We'll see you tomorrow night.